with us in this lunchtime live market analysis webinar. Right, today is the 9th of October, and as usual, Kar Yong will be giving us the rundown of the markets and what are some trading ideas to look out for. So for those of you who are new in this session, just a quick overview of what you can expect. So we do share actionable trading opportunities on key major FX pairs as well as US indices, right? So these are in the form of CFDs. So also in this session, because it's being conducted by Kar Yong, you have the opportunity to interact with him using your questions. So, from the past sessions we've done, this was always well received. There are many questions, and I believe that those who are attending have benefited from them as well. So on top of this, we do share up-to-date developments on Phillip MT5, so these are not to be missed, including new product additions, new tools, new features that you can look out for. And of course, last but not least, something exciting that we do share are exclusive giveaways, right? So one example is the free course by Kar Yong that we've been giving to give you a foundation of FX. And today we also have an exciting announcement to make, which is something regarding our FX community that has just been established last week. So more of that later, I'll share that towards the end of the session. So if you're interested, do stay with us till the end to hear all this juicy news. So a bit on MT5 platform that Kar Yong will be using to share later on. So Phillip MT5 is one of the most comprehensive in Singapore right now with over 650 contracts, right? So it offers the full suite of Forex, precious metals, as well as CFD on indices, individual shares, ETFs, commodities, and even cryptocurrencies. So it is fully zero commission. What this means is that even in trading share CFDs, what you see in terms of spreads is what you get. That is your cost of trading. So extremely straightforward. So in terms of spread, we are extremely competitive. If you are looking at the majors, for example, euro dollar, we are looking at 0.6 pips and gold from 25 cents, right? So we understand the need for smaller account trading sizes for those who are just getting started or who are dipping your toes into the trading market or space. So we offer micro sizes for global indices, and of course for FX we offer as small as 1,000 in notional amount. So what's unique about MT5 is that our individual shares are also tradable from one unit only. So of course some of them are not, but some of them are, especially for Singapore and Hong Kong shares. This is something unique because if you were to trade the cash market, right, you notice that sometimes it's available in 100 units and above. We are working on enhancing the platform always. So we are the first to integrate actually with this tool called Equity Signal Center that gives you daily trading ideas up to 30 a day. So it comes with FX Street, Trading Central News to cater to both fundamental and technical traders. And of course, we do have a strong support team available 24/5. So if you're keen, right, we have a free 30-day demo for those who do not yet have the platform. Just go ahead and scan the QR code, register for your free demo. So on to our speaker for today, for those of you who do not know him yet. So Kar Yong has been in the space for a while now. He started trading with a humble $500 when he was 21, and within a span of 2 years, he managed to turn that into $13,000. Now that's an impressive achievement. And due to this success, he was featured on multiple media outlets, for example, Singapore Channel's News Asia Money Mind, Young Investors, and given several awards like the most popular FX trader in APAC, top Forex Analyst in Asia, and most recently, Best Digital Marketing Trader by Trading Live. So now Kar Yong is the best to give his tips and tricks on this because he has gone through the ups and downs of the markets. He understands the struggles as someone who is starting, and also, the learning curve of someone who is experienced as a trader. So I believe you're in for a treat today. So without further ado, I'll hand the time over to Kar Yong. Kar Yong, over to you.
All right, so good afternoon, everyone. Okay, we'll get started as usual for the weekly session over here. So we'll walk through the markets, get you guys updated as well, and we'll be sharing with you my personal analysis and trade opportunities. Okay, things that I'm looking into for the week. And then we'll do have a Q&A section as well. So if you have any questions, do feel free to just put it into the questions kind of tab. So you can always drop your questions at any point in time, so that later on when we jump into the Q&A segment, I'll be able to directly look at those questions and answer it accordingly. Okay. Now, very quick one to kickstart is to summarize what happened last week in case you kind of miss out on certain things that were happening over the weekend as well. Very, very eventful past few days, I would say, right? Not only from a financial market, but if you keep track of, the recent development of some of the headlines about Israel, potentially going into a war, that would definitely impact the financial market as well, and we're seeing that on gold itself. Okay, so last week NFP was pretty interesting one in terms of the data that were released. I mean, NFP was more than expected if you're keeping track on that. It came out 336,000 versus the expected number of 171, which is a positive sign, right? But actually, if you take a look at the other aspect of labor market, which is the average hourly earnings, which is basically wages growth, as well as unemployment rate, we did see a drop versus the expected number. Okay, and I think this is not something surprising because with higher with higher inflation still kind of happening on, of course, higher interest rate environment in the US, it's going to have an impact in, labor market. Okay, and this is a potential transition going into next year as well, which would naturally start to see the economy slow down, and at the end of the day, it will result in the Fed needing to cut and lower interest rate again, right? That's basically the cycle of it. Okay, so this two data here is starting to build a little bit more importance. I mean, inflation has been the key concern over the past close to 1 year, but we are slowly seeing inflation coming down with interest rate going up. And going forward, that's not going to be like the main concern anymore, but slowly the importance of how well the economy is doing. Are we going to get a very terrible recession? How the Fed is going to tackle that potential concern. It's going to start building a little bit more importance going forward. Okay, so that's something you probably want to also be aware of, so that some of this significance of the data would start to shift as well. Okay, so that's the bulk of it. I mean, for last week itself, and of course, if you take a look at this week here, we do have the US CPI year-on-year data, which is again important, right? Because we're starting to see inflation coming down. Ideally, we want to see that trend continue, so that of course the Fed will not necessarily need to keep hiking rates or maintain a very high interest rate environment for a prolonged period. Okay, so this week focus on the US side is definitely going to be that, which is on Thursday 8:30. Okay, so definitely want to keep an eye on it. Again, if you are familiar with some techniques of how to approach news trading, short-term volatility, the CPI year-on-year data is definitely one event that you can actually look for news trade. Okay, relatively this week in terms of events that will line up is actually pretty quiet. I mean, for me, I think the most important is basically the US CPI, and that's about it, right? Today we have a couple of bank holidays, so expect the market to be a little bit slower, liquidity to be a little bit lower. Okay, and we're in a Monday market, right? So Monday market oftentimes is kind of like, I call it a little bit of a fake move, okay? Because most of the time, whatever happens on the Monday market is not likely going to be a true reflection for the week. Okay, and especially if we do have a couple of bank holidays, that would likely even be the case. Okay, of course, there are a particular news that is not really in the calendar tab because it's something that is surprise. Yeah, so that's the part here, right? Israel and Gaza. Basically, nobody expected it, but it was a sudden war, kind of sudden strike. Okay, I wouldn't call it a war yet, but likely it's going to translate into a war. And this kind of events are definitely something you want to pay attention to, even though we don't trade, currencies related to that. We don't trade like equities market or asset related to that. But surprises in the financial market is always going to have some impact in the global scene, especially if it's like, big event like a potential war outbreak. Right? That's where we actually see oil prices actually went up, gold prices actually went up, right? So that's kind of like what we call a market correlation sentiment effect, okay? Because of uncertainty, naturally safe assets like gold would have a little bit of a strength. And if there's a potential outbreak, of course, the demand for oil will be speculated to go higher, and that will push oil prices up as well, right? So do keep track of how this is going to develop as well. Of course, if it's going to turn into a bigger potential kind of like war, then you definitely want to keep track of like gold as an opportunity to go long term. Okay. So of course we don't just make decision based off like events or one potential factor itself. Okay, and that's where I'm going to bring you to the charts to cover a little bit in the different angles, right? So from a fundamental sentiment perspective, that's what we have, and we'll then look into the technicals to see if we can get an alignment, right? Okay, so what I'll do is I'll jump straight to gold first, since this is probably one of the, I would say, highest potential trade, and definitely something you want to keep very close watch on, not just for this week, but potentially going into a longer term trade, or even turn it into maybe an investment opportunity, right? Now, gold is, so from me, just now we'll discuss about the sentiment perspective, right? Where if there's a war outbreak, uncertainty, people will flock into safe haven asset, right? The other aspect on gold that I'm keeping track of as well, that can be a potential catalyst to push prices higher, is the conversation about the dollar dominance, right? And this would likely be also a natural cycle, but it's not going to be a near-term thing, where the dollar as a global reserve currency would slowly lose its dominance, right? Would slowly lose its significance. And what's next? We won't know now. I don't have an answer for that. But naturally, we are seeing the trend where people are trying to pivot off the reliance on USD. Okay, of course, you have some developments globally that's happening, like BRICS. They probably come up with some system to kind of like move away or pivot away from like petrodollar, and that would also lose some, causes dollar to lose some dominance over it. Okay, so with that perspective, what would likely be the next safest bet if dollar starts to lose its position, right? Naturally, right now, gold will be one of it. Okay, and that's the part where if you're looking from that angle, we have a long-term buy opportunity on gold as well. Okay, so we have short-term sentiment pushing prices up. We have a potential macro perspective where gold may rally in the long term. And if you take a look at maybe somewhere between like the mid-term horizon, is that we're often trading gold against the US dollar, right? So if gold doesn't rally but dollar weakens, then this particular comparison of XAU USD would still rally. Okay, and what would then be one of the factors that can causes the dollar to weaken in the maybe nearer term to the mid-term, which is slightly somewhere next year, is definitely where the Fed starts to pivot from a very tightening policy to maybe starting to consider cutting rates or even QE if the economy is not doing well, right? So we do have multiple approaches, or I would say multiple factors that is contributing to the possibility and the potential where gold can actually go higher. Okay, and of course, if you take a look at the weekly perspective from a charts or even from a monthly perspective, right? So over here we don't have like a lot of data all the way in the 1900s, right? But if you basically look at gold prices in the long run, it's always going to be going up, right? There are multiple economic explanations to that, because of your valuation of currency will always be devaluing, right? And that will naturally push gold prices up, right? So if you take a look at long term, it's likely going to be going up. And of course, that builds in the possibility where this high here, somewhere around $2,060, are likely going to get broken eventually. Okay, and if you take a look at again on all this different perspective, we are in an area that gold prices may be bouncing pretty neat, right? So if you take a look at the daily scale here, we have the previous bottom that was established earlier this year, somewhere around 1800, and the market actually gave us a pretty decent bounce, right? From a technical chart, that's a very, very nice little bounce, right? Of course, we couple it with what happened recently, the storyline behind it, that support the case where gold likely can continue to the upside. And from an Elliott wave perspective, we also see a completion of a three-wave move. So 1, okay, 2, 3, right? And we kind of get an equal link here as well, right? Roughly, you can see, from this top to this top and this top to this top, almost equal in the magnitude. Okay, and oftentimes this, coupled with support resistance, kind of simple basic idea and understanding, there's a good possibility we'll see a bounce, right? Now, whether this is going to be a total bounce and start to break that high, it's a little bit too early to conclude that. But oftentimes, if we kind of see a three-wave completion, the minimum bounce is back towards somewhere between the 50 and the 618 fit, which also opens up a huge upside potential, right, in the short to mid term. All right, so gold here has a potential of a shorter term to mid term trade, and eventually you may want to look into even turning that into a investment opportunity, right? That's what I kind of covered just now. Okay, so to give you like the backdrop, okay, of why I'm actually paying quite close attention to this asset. Okay, so if you go down to the lower time frame, right, like 4-hour chart over here. Okay, let me clean up a little bit. So on the 4-hour chart over here, we kind of recap a little bit, right? This principle, this concept, we have been talking about it a couple of times. On the 4-hour chart, we do have this little crawl formation, okay, as of last week. I'm not sure any of you managed to catch it, okay, but for me personally, I look at a breakout trade, a very simple entry technique, okay. I did manage to catch it on Friday, coupling with NFP, right? Of course, back then I didn't know there will be a news, right? But we're basically just catching NFP as a potential catalyst, combining with technical, combining with the backdrop that I covered just now. We're interested in the upside, right? So that's where I just basically use the setup over here, which we cover quite frequently, from week to week. We see a crawl, okay, not any crawl itself, but a crawl that's happening with some larger time frame support and some fundamental technical support, right? That's where we got in breakout. Now, suppose you manage to get it, of course, that will be a pretty nice one with today's gap, right? But of course, we don't expect the market to keep going up all the time, right? So if you have any buy, my take here is you probably want to shift your stops to break even. If you don't have it, wait for a pullback. So any kind of a corrective pullback is naturally a buy trade opportunity. Okay. Now to give you again a quick recap, what's a corrective pullback? It's not any pullback. Okay. The corrective pullback means that the price needs to come down relatively slow. Okay, you don't want it to be too fast, right? So what I mean by that is, something like this is slow, okay? Something like that is relatively slow, right? Something like this is also slow, okay? So you want either of this kind of move here to be developing there, okay? And that will give you a continuation to the upside, or I would say a buy setup. Okay, so just now on the daily perspective, I can share with you potentially how far gold can actually go up. That becomes your target zone. Okay, so kind of put this in. Okay, your 50% mark will be somewhere around 1940, 1943, which is great. I mean, if you take a look at this, where we are looking at potential entry. Okay, for those of you not in yet, wait for a pullback. You can take a buy trade with a breakout. Your stop can just be below the corrective structure. Your risk reward is easily like 1:3 or even higher than that. Okay, so gold is definitely one asset that you want to pay very, very close attention going forward. Okay, this is even from a short term all the way building up into a long-term opportunity. All right, so keep an eye on this asset. The other one that you may want to keep a closer watch is definitely some of the major pairs like euro dollar, the pound dollar, as well as the dollar Canadian over here. Okay, Of course, euro dollar and pound dollar, they are pretty much correlated. Okay, so the chart kind of looks pretty similar as well. You know, it's coming down, this is coming down. But from my perspective, I'm not too keen in selling the euro and the pound. I'm more interested in looking for potential reversal. Okay, now my thought process is always, especially in the FX market, right? Not so much on maybe equity side of things, but in the FX market, my perspective is the market will never go in one direction too long, right? And oftentimes when we have an extended move, we tend to see some kind of a pullback. Okay, so we did see the euro dollar actually drop almost for the past quarter. Okay, and without any kind of like significant pullback, right? And that opens up the possibility that we may see some significant pullback, and you know, if the euro dollar will continue to drop, perhaps, right? But I will always want to see, can we capitalize on this significant pullback first? Okay, because selling into a market when, you know, on a higher time frame perspective, right? Selling in the market when we have extended move already, the risk reward may not be very, very good. Okay, I mean, on a shorter term, of course, you want to follow the trend, right? But on a longer term, like on the daily scale, after, you know, the market have put in such a move, selling here doesn't really give you a very nice risk to reward ratio. Okay, but if you can get a bounce, then your risk reward ratio will be pretty great, right? Because you're looking at getting into a buy near the bottom, and you don't need this to go all the way to the top, right? Suppose you utilize a little bit of FIP, and if it just goes towards the 50% mark, I mean, that risk to reward is naturally worthwhile. Okay, so for me, euro dollar and the pound dollar, that's the larger time frame perspective. And then of course, if you go down to the lower time frame, okay, let me clean up a little bit. Okay, if you go down to a lower time frame, and if you're familiar with a simple divergence principle, okay, so over here I just plot a RSI. We did see a recent divergence over here, right? And of course, kind of an early sign of a bounce. Okay, now it's obviously not a buy yet. Okay, I don't have any buy trade on the euro dollar at the moment, but this kind of builds up a potential possibility for a trade this week. Okay, so let me just clean out the chart again. So what we want to see, of course, we did get an early sign of a bounce here. Okay, now not a confirmation to buy yet, but if you can get a corrective move here, right? Again, a slow sideways correction. Okay, then what we have would be a potential breakout trade. Okay, so just imagine, right? Visualize a little bit. Okay, if I were to take perhaps this portion here, right? Something like this, right? Develop over here, then you can visualize, right? What we have is this little push up, a slow little pullback. I would use a breakout entry technique. Okay, and then of course your invalidation can be placed just below the end of the correction, and if you can get a break to the upside, getting involved in the breakout trade, that would be pretty decent, right? And of course you combine it with back to the daily time frame. Okay, that's where our potential target is going to lie, right? So risk reward ratio again is a very, very decent one. Okay, so that's the focus I have on euro dollar, right? So don't get overly excited or, you know, impatient in executing any trade. You're probably gonna give it a while, right? And I often like to combine it with a potential catalyst, right? When I say catalyst, what I mean is a reason for the market to move off impulsively, right? Move off with a certain momentum. And oftentimes you want to couple it with a potential news. Okay, so just now we cover, right? This week, one of the key highlight is the US CPI year-on-year data, which is going to happen on the Thursday market. So you can actually combine this different things together, right? So we know on the technical chart what we want to see. We want to see a correction. Okay, and then we also understand that this Thursday we do have a US CPI data, right? So what we can combine is that, all right, if I'm going to wait for a correction, I understand it's going to be slow. Probably it's going to take some time, right? And if this whole thing is going to build up correctively going into Thursday CPI data, then that would be a very nice little alignment. Okay, because then I will be able to look for the breakout trade combining with the news release as a catalyst to potentially push price in the direction that I want. Okay, so that's something you can look into as well, which you know, I would call it a little bit of a time factor, right? So you have a direction, you have a way to determine the direction. In this case here, we're looking at a buy. We also want to then plan our entry and execution of trades in a best and optimum timing, right? And this is where you can look in, like, put this as part of the timing element. Okay, utilizing some of the news here to get involved in the trade, right? So of course, pound dollar, we don't need to talk too much about it. I think it's quite similar. The idea over here again is to wait for a correction, you know, and naturally that will be the breakout, right? So if you're looking at pound and euro, you want to then also be aware of your exposure, okay, because you're essentially trading correlated pairs, okay. Now dollar Canadian is the opposite side of things, right? We kind of get a very strong little push up, but then you can see here on Friday we did see the crawl pattern, right? I kind of covered this pattern before. Every time you see a crawl, don't go and buy into it anymore, right? But expect some kind of a pullback or even a potential reversal. Now it's not 100% all the time, but you can see, you know, oftentimes that's likely going to happen, okay, because there's no such thing as 100% in trading. But if you can get like more than 55%, I think to me that's high probability, right? You want to lean towards the higher chance side. Okay, so every time you see a crawl, you know, an impulse move followed by a slow move, we call that a crawl. Expect that kind of pullback or reversal, right? So same thing over here. Now we did get an impulsive move down last Friday. Again, two factors, primarily the dollar as well as the CAD, because CAD is correlated to oil. With the potential oil, which is the potential war outbreak, oil prices are likely going to continue higher. Canadian are likely going to continue strengthening, and we're kind of expecting a pullback minimum, right? So maybe the pullback here again, we come back towards that 50 and 6.8 zone in the short term. So this would likely do a little bit of a corrective, ideally a correction, right? So you get an impulse correction, then you look for one more downside. That would be a short-term target. Now, if you're going for more, this has a potential to even break the previous low here. Okay, because on the daily scale perspective, we may be seeing, okay, this again, of course, we need to update our view regularly as the market continues to develop. Okay, but we may be seeing something like this, right? We may get a fake break here, and the possibility of this, you know, going all the way down and retest the previous bottom of this entire channel is still on the table. Okay, but of course, oftentimes we look at the market week to week. We need to update our views and sort of things. So, I mean, if you can get a trade, you know, a correction here, and you can get a sell trade with a target at 50 to 6.8, which puts you around 1.3580, I think that's more than enough, right? You'll probably look to exit the trade anyway, take profits, and then look for the next opportunity. So dollar CAD is also one opportunity that you can look into this week. Okay, pretty similar to the euro and the pound, right? It's just the opposite side of things, okay, because of, I mean, the dollar CAD, the dollar is in front, right? Euro dollar, the dollar is at the back. Okay. Now for yen pairs, I would suggest to just stay out of it for now. Personally, I don't see any clear opportunities within the yen pairs. So yen pairs, of course, like dollar yen, euro yen, pound yen, CAD yen, odd yen. Nothing much there yet at this moment. Okay, I mean, we did get this little spike. I'm not sure how many of you were aware of it. Okay. Yeah, but there's really nothing behind that causes that spike, right? But of course, on dollar yen here, we kind of briefly touched that 150, very strong psychological number. And of course, we get a very nice little kind of like rejection, right? That volatility there was close to 300 bits, right? 280 bits movement. This kind of event is pretty scary, okay, but you can't entirely avoid it. I mean, during that spike down, even if you have a stop loss in place, there's a very good possibility you may get slippages, okay, because things are just happening so fast in the market. You may get out of the market in a worse price than you want, okay. So you might slip maybe, you know, 20 pips, 50 pips, worst case scenario, you may even slip more than that. But even in that case, you shouldn't blow out your account if you do proper risk management, right? Because if, let's say, on a typical risk trade, you take maybe 1%, 2%, right? You have your proper stop loss, and if, let's say, you get slipped, in such scenario, it shouldn't blow out your account, all right? And most, if you're risking 1%, maybe this trade here because of slippage, you take a 3% loss, you take a 5% loss. It's still pretty manageable, right? That's something I just want to highlight, because a lot of times traders get very, very scared of, such events, and they say that it can blow out account. But if you actually do proper risk management, you shouldn't. Okay, but of course, if you are trading on a 1 minute chart and then your stop loss is like 5 pips, 10 pips, right? Which I don't recommend retail traders to do, like 1 minute chart, put your stop at 5, right? Because you're at a disadvantage already. You don't get institution kind of like spread. Yeah, so I mean, if of course, you put in a 5 pip stop loss, 10 pip stop loss, and then you get slipped 50 pips, then of course that will be way significant in that dip of your equity. But day to day, if you're normally just trading on an hourly and a 4-hour, it shouldn't be overly scary for you, right? And I just want to note, I just want you to know that, I mean, in my journey of trading, kind of like encountered quite a bit of slippages myself. Okay, it is what it is, right? I mean, that's how the market functions. That's part of a market risk. You just need to know how to manage it, right? From a technical perspective, in terms of like calculation, risk management perspective, as well as like psychological perspective things, right? But the good thing is, I mean, not only last week, but a couple of weeks in, I'm personally just avoiding all the yens, right? I just think that where we are right now on dollar yen, it's not ideal to be buying, right? I mean, take a look at the daily scale. We're kind of closing the gap towards the previous significant high. The Bank of Japan has dropped a little bit of a hint that obviously they don't like an overly weakened yen. They're dropping hint that they may intervene, okay, and there's no reason to be buying the dollar yen at where we are right now, but instead I'm just waiting for a potential reversal, right? So I'm just waiting, right? So sometimes it's not just about the setup that we're looking at, but it's also where the price is in relation to in the past, right? So that's what I use the term context, right? So sometimes you hear me use this word context, okay? Not all setups are the same, okay? You need to put that setup into a context perspective. Is it worth taking, right? So my take here is all the yen pairs should probably just be a little bit patient, okay? Because if you're taking a look at yen pairs, right, the dollar yen tends to be the driver, okay? If the dollar yen doesn't give you a very clear sign as to where it's likely going to go, whether is it buy or sell, likely the rest of the yens are not going to give you a very clear direction, okay? So that's something you can take a note as well. All right, let's take a look at some of the equities market as well in terms of index, right? So we have S&P, Nasdaq, and Dow Jones. S&P here actually on the 4-hour scale is actually giving me a decent crawl pattern. Okay, so again, whenever we see this pattern, you know what I'm looking at, right? We're not looking at the sell anymore, but instead we're interested in the bounce, right? Now, of course, on the daily scale here, you can see also the market on S&P actually put in a 3-wave move, completed, potentially done, okay? And of course, that means that if this were to move out, right, this crawl here can either be a correction, right, a general pullback after a 3-wave move, which means that if you put in a trend line here, you may retest this area, or it can be a breakout to the upside, okay? Now, when you're looking at equities, you definitely also need to get the perspective from the macro view, okay? It's a little bit counterintuitive, but a bad economy is actually quite favorable for equities market, okay? Not all individual stocks, but in general, for equities, if the economy is bad, okay, is actually pretty good for them, right? Now, why is because from a macro perspective, if the economy is not doing well, the central bank needs to tackle that, right? Central banks needs to be in the easing policy mode. It needs to cut interest rate. It needs to print money. And when they're doing that, some part of the money actually get flows into equities, okay? Because if you have excess money, where would you put it? You would likely put it into investment opportunities and things like that, and some of it will just flow into equity side of things, right? And when the money is flowing into equities market, then what do you think? People are buying up, demand increases, price will go up. Okay, so it's a little bit counterintuitive, but actually a not so good performing economy, a bad economy, generally means good thing for equities in general. Okay, and again, if you put back the macro perspective that I covered just now, right? It's always in a cycle where after a hiking process, the Fed will cut rates, right? After cutting rates, the Fed needs to hike rate, right? It's going to repeat this over and over again. And we're already almost close towards the peak of interest rate. Almost, right? Are we going to see another one next month? We don't know yet, but likely we're going to be the peak of it already, right? And as I mentioned, there's some sign to suggest that the economy is not doing really great anymore, and maybe next year the Fed would start to talk about cutting, right? They'll pivot. And if you're taking a look, from again near term to mid term to potentially a longer term opportunity, that opens up a good possibility where we may start to see a little bit of a buy opportunity even for long term, right? I don't think that S&P is likely going to retest back around the zone. Maybe it's gonna be, bouncing off here, coming down a little bit more, but the possibility of price going all the way to retest, the bottom here late last year, I don't think it's a very high chance. Okay, now of course nothing is 100%, nothing is certain, but unlikely. Okay, so if I kind of put a little bit of a FIP guidance here as well, you can see I think if we don't get a breakout impulsively from there, then you just want to be cautious and maybe catch another move down and then look for another buy opportunity somewhere around that zone. Okay, so that's my take on the longer term perspective on equities, right? When we're talking about S&P here, it generally translate also to NASDAQ and Dow Jones, right? Naturally. So that's on the big picture perspective. If you're into like equities investing, definitely you want to pay closer attention now as well. Okay, because we have short term here, crawl suggests a bounce to the upside. Whether this is going to be all the way breaking top or it's just going to come out a little bit, you need to monitor how price is going to develop. Okay, yeah. So what are some of the opportunities and key zones that you can look out for? Obviously, we are looking at this as a bottom now. Okay, you want to wait for a corrective pullback. I mean, we did get a small little gap potentially because of a news, okay, related to war, risk on, risk off kind of environment shift would have an impact in equities. But if this continues just develop and does a little bit of a corrective pullback, again, a slow move down, then you will be able to look for a breakout trade. Okay, so as a reversal setup, right, you don't want to try and catch the lowest point to buy, right? You don't need that. As a reversal setup, I always want to catch potentially the breakout, okay? Because a breakout trade setup means that you're actually waiting for a little bit of a confirmation that yes, price indeed want to go in the direction that we want. Then only we get a break and we enter, and then we ride it, right? I don't want to catch the reversal here because we are in a reversal trade. Okay, if you're in a trend continuation setup, then yeah, you can look for entry near the reversal zone. So that's a slight personal preference, right? If I'm catching a reversal trade, I always favor a breakout entry technique. Okay, so this on S&P. Again, if you take a look at general equities, they're more or less the same. Okay, maybe slight difference now, right? So you can see here on the daily scale, NASDAQ, okay, again, trade move to the downside. We get a little bit of bounce, right? So the pattern on S&P and NASDAQ on the forward is a little bit different, but I think overall direction is the same. If you get a corrective move here, you can look for a breakout trade to the upside. Okay, on the daily scale is more or less the same, right? Trade wave completed, so we can expect a little bounce. Whether this is just going to go here or it's going to be all the way up, you need to track, right, how the market's going to develop as it goes higher. Okay, yeah, but Nasdaq here is naturally outside. Dow Jones more or less the same, right? Dow Jones did drop a little bit more, but again, same thing here. We're kind of seeing a little bit of a three-wave move, right? So short term, we're expecting a little bit more upside, right? Same thing. Wait for corrective development, which means it should just, go probably sideways, spend a little bit of time there, and then you look for the breakout. Okay, so those are the three US equities. I personally look a little bit more in the S&P, right, rather than the Nasdaq and the Dow Jones, because Nasdaq and Dow Jones index are a little bit more heavily weighted in certain sector, but S&P is more general in the entire US market itself. Okay, so I hope also answer Lee's question over here, regards to like ES and NQ, right, which is S&P and Nasdaq. Okay, good. I think last week or the week before that, right? One of you actually, not sure if you guys are here today, for those who attended like last 2 weeks ago, but I think one of you did ask about US versus Chinese yuan, right? I think going into this week, I mean, you're very interested in this currency pair. It's actually building up a little bit more neater for a setup, right? I mean, last session that we cover is more of like, okay, I want to just visualize, right? We don't have this part in the last 2 weeks, right? We're just talking about potentially this has completed a 5-wave move, coming into the zone, look for downside. But after that, the market actually spent like 2 weeks developing this, which is great, right? Why? Because then now we get an impulse correction setup. So if you go down to the lower time frame, you can actually quite easily put in the trend line here, and you may look for maybe a breakout trade, right? Depending on how aggressive you are. You can look for a breakout here, you can look for a breakout at the bottom, but I think on the forward scale, if you look at this pivot low for potential breakout, is good enough, right? I mean, it's not overly aggressive. Now you can even consider, because it's developing pretty neat, okay, potentially building a head and shoulder pattern, okay. You can even pull in your fips from like swing high to swing low. Okay, we kind of tagged that already, so pretty irrelevant. Because I was looking at potentially looking at 618, right? So even if this bounce up a little bit, right, as long as price is below this high, there's a good possibility you can get a better entry for a downside as well. And follow, right? The other way to measure is to look for equal link, right? 1:1, which puts you somewhere there. Okay, this would send this a little bit deeper. Okay, let me clean up. So it's not, yeah, so something like that. Okay, so you could potentially look into something like this as well. Now, I don't trade the dollar Chinese yuan, right? I mean, just to update, for those of you who are keen, that's a potential setup over there, right? So again, quite a bit of alignment in the dollar perspective, where we're seeing that there's a good chance the dollar would likely weaken in the at least the mid-term perspective, right? It may eventually lead to dollar weakening in the long term as well. But for trading perspective, we are not too overly concerned with the long term. Okay, the long term is just giving us a clue as to how far our profit potential can be. Of course, the greater it is, the better it is, right? But if you're looking at trades week to week, I think the short to mid term is something more significant to us. Okay, any other questions that you guys have? Okay, so my focus really for this week is definitely on gold, as well as some of the major pairs, right? Like Euro, Pound, and the Dollar Canadian, right? That's definitely the focus for me this week. So far, so good. Okay, if you're into crypto, right? Specifically, you know, just Bitcoin here, we may get an opportunity to go long-term buy, right? If you're into like a little bit of exposure in the crypto market. Okay, just a quick labeling over here. Okay, but the idea is if you can get a little bit of a pushback to the downside, okay, coming towards like the 50 and 618 pullback. Again, this is a three-wave move completed, right? So we expect a three-wave move correction to come down. If you can get that, there's a good chance we may see upside for BTC. Okay, and again, if you go to daily scale perspective, this may continue upside, right? So we have a little bit of a bottoming there as well. Okay, so if you're into, you know, asset, a little bit more speculative asset like BTC, there are some opportunities going forward as well. Whether we're gonna get this move down this week here or early next week, we obviously need to see how the market is gonna play out. Okay, but if you start to observe Bitcoin prices coming down, getting closer towards like 26720 or say like around $26,800, naturally you want to start paying a little bit more attention to see if you can get into a buy opportunity, right? Okay. Okay, a question: how far is the typical pullback after a crawl? After a pullback is completed, do we always expect the original trend to continue? Okay, not necessary. Okay, because a crawl pattern on Elliott wave perspective, right? Is essentially what we call a diagonal, right? So diagonal from Elliott wave perspective, we have two types. One is a leading diagonal, one is an ending diagonal, right? Let me see if we have this. Okay, I'll use gold to explain a little bit. Okay, so if you take a look at a couple of mini diagonals or crawl pattern, right? So this one you can see push up, continue to go up but slow down, right? That's upside direction, and you can see here come down and then we'll push down a little bit. So that's the opposite direction of things. Okay, and then of course we have one here as well, right? Which push down very fast and then we'll continue to drop a little bit but slow down. Okay, now I just want you to observe the crawl pattern that I just highlighted over here is actually happened after we have quite a bit of a move, right? So you can see here up, correction, up, and then a crawl, right? Down, correction, down, and then a crawl, right? Obviously, this one is down, 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 and then a crawl. Okay, so this kind of these three crawls here, while they are a little bit on opposite direction or different direction, they are generally what we call ending move, right? Because it's happening after the market has moved off a little bit. Okay, so these are usually any way we'll categorize them a little bit more towards like ending diagonal. Okay, now ending diagonal will give you a little bit more of a bigger reversal, so you can observe here, right? After this, we get a bigger reversal down. Okay, now this one here, it came back towards like 50 and 618 area. Okay, around that 618 zone. Okay, oftentimes that's the minimum expectation you can build in. This one again, you can see it came down a bit, does a crawl, so it's an ending, so the move back up is quite big. Okay, so of course then this one here again, what we can expect a bigger move, right? Because that's the ending side of things. Now at times you will see a leading diagonal. I think recently we may have an example here. Okay, not the best. Okay, leading diagonals are not very common. Okay. All right. So I would just highlight. This is not really a good example. It's an ending diagonal as well, right? Because ending diagonal are often the most commonly observed ones, right? Okay, I mean, if you're taking a look like on this Aussie dollar, right? Can't get one here as well, right? But this is ending, right? Why? The market has came down quite a bit, okay, and then it forms there. It's not like the first leg. Now, what I mean by first leg here is, okay, so if this is an ending diagonal, and we kind of push up, okay, we kind of push up, which is great. This diagonal is resolved. We have a push up, and then we start to see a crawl pattern there. Okay, now that's what we call a leading, right? Because after the market drop, we get a bounce and the crawl happens at the first bounce. Okay, now that's what we call a leading diagonal. We don't expect a huge drop. We only expect maybe a little bit of a pullback. If it's a leading diagonal, right, we expect a little bit of pullback. We then expect the market to continue to go higher. Okay, so the difference between an ending is ending here, we expect a bigger reversal. If it's a leading, we expect a pullback. Okay, so that's a slight difference in the expectation of things, right? But generally, we always focus on the 50% mark, right? So in this case, you can see this massive drop. We have a crawl here. You know, we often look at a 50% mark. Same thing here, right? Just not pull it, right? You can see this came back close to 60. Of course, this push up from this crawl went a little bit deeper. Okay, so minimum, we are always looking at the 50 and 618, targeting that. But you know, you want to build in again, not just a simple crawl, right? But for gold here, you can see the expectation of it is not just that, but from a daily perspective, okay, you don't want to cut yourself short as well. You may take partial here, but then you need to understand, okay, if I can go for more, maybe I want to have like first target and second targets. Cool, right? So yeah, hope that kind of clarify your answers, your question as well. Okay, in terms of like, how do we target the pullback, you know, or is it going to continue in the original trend and such, right? Yeah. Okay, but bear in mind, of course, not all crawl equals reversal. Okay, it's high probability, but it's not certain. Good. Okay. Any other questions from you guys? Right. Cool. If no question, maybe I'll quickly pass the time back to Yijie to do a quick closing for today's session over here as well.
Wonderful. Thank you again for the insightful session, Kar Yong. I think we have learned quite a bit about the markets. Indeed, you know, the markets have been volatile with so many different happenings going on. And I think with volatility comes different opportunities for us to identify. I think you've shared several of them today. So do continue to look out for these market happenings. I think it'll be critical in our trading. So for those of you who are here for the first time and have enjoyed the session, I'm pleased to share with you a good news. We're doing this on an ongoing basis with Kar Yong, right? So on a Monday every week from 12 to 1, we do have Kar Yong come to share with us a bit about what's happening in the market, how could it impact, you know, different positions, and what are some of the trading ideas there are. So as you've seen from today's session, I think it's a bit different from what we usually do in the educational ones where more theory is covered. But instead, for these ones, we jump straight into the charts and share with you what are some levels you can look out for. So do click in and sign up if you're interested to join us in next week's session. All right. So as mentioned, some exclusive incentive for attendees, right? There is a e-course that is curated by Kar Yong, personally taught by him, that covers 7 core modules. So in it, covering fundamental analysis, technical analysis, sentiment, risk management, psychology, and so much more. And I think this applies to those who are beginning in your trading journey as well as those who are seasoned. It could be a good leap in your learning curve or a good reminder for those who have already been in the market. So we are giving a limited time giveaway, but once you get it, it's a lifetime access. So you can review this course again and again. So this is called the 4 trading pillar methodology. So you might be asking, how can you be eligible for this course, right? So very simple. All you have to do is to place a trade of any size on any instrument covered in today's session, right? So just one request I ask that in your order ticket in MT5, in the comment section, just input today's date, which is 091023, and LMA, which is short for live market analysis. Now, for those of you who are using the Nova platform, my apologies, just send us a screenshot of your trade and email to us. Then we will verify that you have done the trade and we'll send you this course. So at this point, if there are anyone who has already done it but have not received it yet, don't worry. Do drop us an email. At the end of this session, I'll share my email address. Do drop that to us. We will check in. If you are eligible, you will definitely receive the course login, right? So more reasons for you to open an account and trade with us if you're not already a client. So we're having a 40th anniversary giveaway, right? Because Phillip celebrates our 40th year today, this year. So from 1st October to 31st October, we're giving away 250 Decathlon vouchers. So how can you be eligible? 3 things: open an account with us, select 40th anniversary under the section how do you know about PNPL, and fund your account with a minimum 4,000 Sing dollars. So scan the QR code. Do note this is applicable only for non-existing clients of Phillip Nova. So if you're a client, I will share something else later on. So this is limited to the first 40 only. So do take note, fastest fingers first, right? So for clients, right, we also have something for you, right? If you, from the period of August to September, sorry, this needs to be updated, pardon me. We will be giving away different gifts. Let me just update again separately. Apologies, these slides are not updated, but do scan the QR code. Our website contains the latest information on what we are giving out, and the criteria remains the same, right? So 3 of them: either you place 1 live trade via Equity Signal Center, you place an FX trade of any size, or you trade via Nova 2.0. So completing these 3 actions will give you 3 chances and the maximum chance to be eligible for one of our prizes. Again, for the most updated price, do scan our QR code and find out what they are. So the last thing I'm excited to share with you is actually our exclusive community that has been established since last week. Now, in this community, what you can expect to receive is notifications for when our weekly session goes live, right? This is something that we have been hearing from our clients, right? Wanting to receive the link. So in this WhatsApp community, this will be sent there. You will also receive the session playback, right? Every week after we're done with the session, we will send you the link. So do note this is only exclusive to people within the WhatsApp channel. Even though it is uploaded on YouTube, it is an unlisted link. So you will only be able to find it within the community. You'll receive our weekly market commentary done by Kar Yong, covering the different contracts that he shared earlier and also summarized in word form. You know, if you don't have time or you need to just have a quick recap, that will be sent in there. And also we will highlight some daily trading ideas based on our tools. So if you're interested, again, this is for clients only. Scan your QR code. We need you to fill up a couple of questions, and then after that, you know, we will add you in the WhatsApp chat. All right. So my name is Yi Jie. On behalf of Phillip Nova, I thank you for your time for attending today's session. Again, if you have any questions or any feedback at all, do drop me an email. So my email is over on the screen. So do take a screenshot or, you know, just write it down, and I'll be pleased to assist you in any way that I can. So once again, thank you, and I look forward to seeing you guys next week. Have a great week ahead. Bye-bye.